get to Robert's question. Read me that one. I know I read it and
All right. So Robert's question is, bond markets and VIX index seem to confirm stock market rally. If you agree, what are your major sticking points with this divergence? I think.
I'm sorry, Matt, Ira.
Yes, Robert.
I must have miswritten. I meant to say that bond market and VIX index does not confirm the bond market and the VIX index does not confirm stock market rally.
You know what, Robert? I inferred that. Trust me, I knew that's what you were asking.
Yeah, but I was just going to explain the divergence. That's what I thought too.
Yeah. So yeah, it doesn't. But the bond markets are connected to nothing. Although, see, I'm glad you asked this question. Pay attention to the 530 and 1030 curves, because people who are getting a little bit nervous as to all this stimulus and what it may potentially mean, you can't fight the Fed. So meaning if the Fed is in buying, they force everybody else to buy. I read this analysis and I don't know whether to laugh or cry from people who say, oh, it's not the Fed driving this, and there's plenty of it's the global. Okay, I can be proven wrong on this and I'll be the first one to admit it. But right now, every step of the way proves this right, because we've seen the dollar. I mean, come on, the dollar has gone down and it's because of this action. The metals have certainly found their voice. It took them a while for I think many reasons, but they certainly have found a voice here, which is, anybody who's listened to me and I'm not saying, listen, I've been wrong on some things, but this move is directly correlated to the bonds because the bonds are totally broken. Santelli and I have been talking about this for 10 years, and it's exactly how we've talked about it. It's broken. What is broken? The signaling mechanism, because you're looking for the bonds as a signal, but how can they signal anything? And as I said to Rick, first of all, I thought the reporting, let me step back a minute, but this will answer Robert's question deeper. Friday was ridiculous on the unemployment data. I just didn't see it as positive, not to the extent, and even Ed Lazer, who said Italian, who I have great respect for, I think he's really good at this. I disagreed with it. I didn't see the positive nature of that everybody else was speaking to. Some of the jobs, the education jobs, what are they talking about? Where did these come from? It had to be a seasonal adjustment. And then the fact that Florida was like really one of the mainstays of job growth, my kids are down in Florida. I'm a little suspect about that. Although the construction, I understand, because people are moving to Florida, so much so that Cuomo was out this weekend begging people to come back.
Jeez, I saw that.
Begging. And you know what happened overnight in Chicago, and I'm not making light of it, doesn't help the situation, my friend.
No.
Does not help the situation. But what did the bond? So we have a contentious argument, Robert, going on. Do the bonds signal that the economy is not coming back and that we're going to go further into a deflationary spiral? Because that's what now, and there's people who I respect who are of that camp. Nobody more so than Lacey Hunt. But to me, I'm looking at the reaction function of the Fed to direct me. Right? Because if that's right, by every measure that we hear about the gold should be going down. And yet it hasn't been. In fact, it goes up with the equity market, which seem both to be stores of value in people's minds. So they all go up together and everybody sits there and goes, But I think we're, and therefore the VIX gets forced down. But don't forget, Robert, you have a lot of VIX sellers out there. Now, Mnuchin and company made an interesting comment, I think on Thursday, talking about that they were going to go from issuing all this short-term debt to issuing longer term. I wasn't sure. It seemed like they were up to about 10 or 20 years, which is probably why the 30 and the Ultra are really lagging. The Ultra is really under pressure today. so people are going to sell where they can. Now, as I said to Santelli in our own private conversation, and I'm not telling secrets here. Rick and I have this conversation, and Rick would tell me it's because this is me talking about this. All right? And the conversation is this. When the Fed balance sheet grows, you lose a seller from the bond market because the Fed does not hedge its balance sheet. So if the Fed is holding $4 trillion in treasuries, those, let's say that the Fed was back at historical levels of, let's say, 500 billion, which is high, historically high on its balance sheet. Now you're up to 7 trillion. I said 500 billion. Now you're up to 7 trillion. Well, there's a lot of paper that's sitting on the Fed balance sheet that does not get hedged. And if you're wondering why the Fed doesn't hedge its balance sheet, it's because they have a printing press. And I'm using their words. I'm not making up words. That's their words. They know how to eat all their losses. So, but the problem is, and they're walking this into a very dangerous situation, not now, not 6 months from now, but if the economy started to turn up, and this is what the real discussion is going on out there. If the economy were to start to turn up, interest rates would have to go up. If interest rates go up, the massive U.S. deficit would cost more to finance. That's why they're talking about yield curve control to keep rates lower for longer across the whole curve. Because when that happens, you then get into a situation where so much of the budget has to go towards interest rate expense, and that eats into a lot of discretionary programs and other programs. This is the real danger going forward. Now, I can't tell you when it's going to happen, but in academia, that's the discussion that's taking place. And you know what, Chris Whalen is talking. There are people out there talking about it. Are you guys hearing me okay?
Yeah, we hear you perfect.
Okay. So these are things we have to be aware of. But I think Robert's question is absolutely the important question. And it comes to my, hypothetical, but it's not so hypothetical, that I've asked for the last 4 months, which is, or 3 months anyway. If unemployment is 9% in December after the election, and inflation on an annualized basis is 6%, does the Fed raise rates? And for most intelligent people, they say not a chance. Right? Can we believe that?
Yes, I can't. I don't see how they can.
Right? And more people are starting to take Powell to task in their own way with the no fault of their own discussion. Even Raghuram Rajan used that phrase in a piece he wrote last week for Project Syndicate. Now, he didn't go the same rate I went, but he brings it up, and it's an important thing on a generational basis. Because when you sustain a policy based on no fault of their own, it makes for some very, you are on a tight wire. And as Leon Russell would say, one side's hope and the other's one side's hope and the other is fire. No, yeah, maybe, I don't know. So we're in that situation, and this is a very, very dangerous situation. And on a contrasting basis with Europe, because I've read, and Robert, I know your background, so we'll bring Europe into this discussion, where they talk about, well, Europe has its own problems. In fact, I haven't read the piece, but Adam Tooze has a piece out in Foreign Policy that I probably won't get to read because I won't pay for it. I almost thought about paying for it because he's worth a read, but the rest of the stuff is such nonsense. Europe does have problems, but relative, and remember, currency trading is all about relative. And the interest rate differential, in fact, I ran it this morning on the 10s, okay, because that's what the market likes to use. So the 10-year differential between bunds and treasury notes we are down to almost a 6-year low at 108. Now, when the euro got to 160 back in 2008, that the bonds actually yield a full percentage point more than U.S. Treasuries, almost a full percentage point. So that's where you saw. Now, interest rate differentials don't always pan out. It's just one variable in currency trading, but they don't always pan out. But as you start to see this, and I went back and looked, and the comparable time is 2014. So of course I went and looked at the euro in 2014 when we were at this 108, 108 price range, and the euro, even in the midst of all of that, problems, the euro was, up in the 130s. So when we look at it in that way, why not? I know that 125 is going to be a huge area of resistance, and there's some correction going on because the move has been, Matt, that I trace it to May 24th when I definitively turned bullish on the euro.
I remember
Bible's pivot, but these are things that we're going to be watching for. And again, actually, it didn't surprise me that the dollar was higher because I'm going to digress one more time here before we get to the other questions. I thought the way, and again, I preface this is not a political statement, but Trump totally outmaneuvered Schumer and Pelosi because it looks like he's the one saving Main Street now, that they're more concerned about big cities and, and they want the money for big cities. And they've positioned him. They've positioned him by him saying no and Mnuchin taking a hard line and McConnell doing that work. They've positioned him to look like he's the one who cares most about Main Street.
That was part of my question too. Was
okay. Yeah, I thought so.
Did you think that was there were so many great pieces written over the course of the last 4 or 5 days. Just very interesting articles about the dollar and about bonds, tips in the FT, that it made me wonder. If you saw the EO that Trump had written as more of a political maneuver, and
absolutely. And actually, the fact that they have to go to court to stop it puts it more in that, now it's headlines. So anybody understands. So now he's going, hey, I'm just trying to help Main Street, and they're trying to block it.
And hopefully that'll push them back to the table so that they can come up with an actual, real, fundamental, workable infrastructure plan and getting people back to work and rebuilding this country.
Well, I think that's right. And I think that if you listen to Mnuchin, they're willing to compromise, but they're not going to get the money for big cities to bail out past policies. Not going to happen. And believe me, what happened in Chicago last night doesn't help that case, by the way. Because Trump's using this. This is almost Richard Nixon on a law and order campaign in 1968. Because it's going to play into his hands. I mean, whoever thought that was a good idea, and that was an orchestrated deal. I don't know.
Of course it was.
But whoever thought that was a good idea politically, I don't see it. I'm not the being and end all of knowing everything, but I got some serious issues with that. As far as the politics of it, the political fallout is not a good thing with that, by the way, because it helps Trump.
Yes, it does.
Because you can't find, even I heard activists this morning decrying it, but it's not going to stop.
No, it's going to get worse.
Listen, I'm surprised it took so long. And then if they're not opening the schools, let's go back to your 21-year-old son. I don't know what his plans are.
He's staying in Vail. He's not going back to school this year. Here's, and this is something Jen and I talked about it this morning early, my wife and I, and we have casually discussed putting the house up for rent and taking off. I spent a week in Vail last week. I'd love to go there, spend, because our kids our younger kids all have e-learning. We've got a boy in high school at Brother Rice High School that they're still going every other day, but there's nothing holding us here. I won't go into the city for dinner. I won't take my kids to a ball game. Well, not that you can, but I wouldn't go down to a park in the city. We haven't been in the city. Our parish is on Chicago and Ogden. I won't go to church in the city. Everything we do is on the south side. I go to, the only place we go in the city, Ira, is our country club. That's it.
Why? Where do you play golf at?
Midlothian Country Club.
Okay. So, you know what?
Time to go.
Listen, my wife and I have been dealing with this. This is because we don't have any kids here anymore. So what am I staying for? I've buried my parents, her parents, two of my siblings. I have two siblings still alive. You know what? My kids are not here. And, my life has been here. I love the city. I know the city well. It's one of the things that bothers me. But, you know what? We were getting out of here anyway, because it's just there's no, the things that ought to hold me here are not here to hold me.
You're right.
So,
me either.
And to go visit graves, I can come and get and drive through. I've been doing a lot of driving. Drove to New York last week to see my dear Alex and her new daughter, and we had to do it by driving. I'll probably drive down to Florida because it's the only way I can go see my grandchildren. Otherwise, I have to quarantine.
Yeah.
I have to respect them, and of course I'm going to respect them because I'm going to respect their health and their children's health, my grandchildren. So there's not much holding us here, and it's just I'm not getting into editorializing. It's it's just what it is. But there's just nothing to hold me here right now.
Me either. And we've already seen an influx of businesses leaving. We're going to see and closing restaurants, bars, shops. Who thinks that and Gucci is going to reopen on Michigan Avenue? All of these stores all of these big stores which bring huge revenue into the city. That makes it one of the top 10 shopping cities in the country, in the world. Right. Outside of Milan, and other Rome and New York and LA, Chicago is one of them. Well, who's going to be here anymore? Then that actually kind of leads me into a thought that Michael and I had too. Into another question actually is, Michael is very concerned about what's going on in Germany, and we were talking about it this morning. He's more than a little upset with this. Germany and the Social Dems are considering a coalition with the Greens and the Communists in order to.
I read that. That's with Olaf Scholz, right?
Yes.
Yeah. Okay. So that's how desperate, because they've been totally outmaneuvered by everybody. So they're trying to resurrect themselves. And I think it's at a tough time, because I think Merkel, and I'm not a Merkel fan, but she, I think with Schweibal's pivot, that she got, I would say, saved, because I think it was him who was the, somebody said, well, no, he was just doing the carrying Merkel's water. I'm not sure about that. My German is totally deficient, so I can't read the primary sources and tell you, oh, this is what I can't. But, I read enough, and I read the Der Spiegel online, I'm all over the place with following it. So, yeah, the Social Democrats are just looking for relevance. They've been so badly led and made so many bad decisions. But it was interesting that the two lefties who defeated Scholz turned around and supported him. So maybe they're getting a little bit of wisdom, or just stepping back from whatever bigger plans they have. The Greens, they've been all over. In some ways, they're conservative, and other things that I know, Michael will probably slap me in the head. They're way too radical on for the good of the German economy. But a lot of things in play. I think there's a lot of things to be worried about. But again, the things are relative. And in Germany is will be interesting to watch. The others, the Frugal Four, friggin' joke, as I thought that they would be, because they negotiated for what they wanted. They got a little something, but I didn't think I thought that was already in the cards. When you negotiate, you go up in numbers because you can always come down. And basically 400 billion and 350 billion. I think that Lagarde was happy at 400. She started at 500. I think Schweibel put out 500 on grants, and the fact that they got 400, okay. And you know what? It's what we've always discussed. It's the German credit card, and now it's out there for everybody to see. There's no getting around it.
Mhm.
Now it's just, will the German people be pissed when they really realize that the EU, in order to exist, has to exist as a transfer union? Who will be the transfer agent? Well, we know who that is. And the fact that the German people were never asked in a democratic fashion, because this was all decided in the Bundestag, that it'll be what, as Otmar Issing wrote in that FT piece a few years ago, and what we know as Americans through studying eighth grade history, no taxation, no representation, no taxation without representation. And this is a classic. When you form a transfer union, you have massive tax transfers. That's it. And so if the Germans people, they may have to be asked, but there's never, and Michael will verify it, there's never been a referendum in Germany. Nobody's ever asked the German people directly. And now it's probably too late, as I've maintained, that once you built that balance sheet up so massively, and I think that's where we're at. And Lagarde played that brilliantly.
Lars, Michael, is there anything that you guys want to jump in here with? We two Germans in here.
Thank you very much, Ira. Yeah, it's very difficult for me right now to add something because I'm so close and so emotional about this. Maybe the only thing I'd like to add is the German people, different to what foreigners see in them, are not so productive anymore, and most of them are recipients of transfers and taxes and not productive parts of the society. So I doubt that, how can I express that the Germans will have a moral interest in another way, in a more economic way. I don't know if I can make myself clear right now.
You know what? This is Michael. Who is this? Or Lars?
It's Michael. Sorry.
Okay, Michael. Okay, Michael. That's but I think this has been the legacy of Helmut Kohl and the way that they did the unification.
Yes, I know. Of course, yes.
Okay, so yes, so you're right about that. But one thing that the Germans still, in my mind, economically do very well is still with the worker programs, with the apprenticeship programs. And I think they're in a difficult time now. But if I see that, I would say that that's still a massive positive for the German economy. And it really helps promote the high engineering and industrial standards of Germany, because they do a good job of that. Yeah, I think there is absolutely. And for Germany, it's a bigger problem than it is, I think, elsewhere because of history. Is the wealth inequality is a severe problem, and I think that's what you're really speaking to. And how it gets resolved, I don't know, because the transfer union, of course, unless it's totally on the back of the, let's say top 10%, the inequality is going to grow more and more. And that's where the anger is going to come from, I think.
I totally agree. And Helmut Kohl said a state quota of 50%, which means of every euro, 50 cents goes through the hands of the state. A state quota above 50% is socialism. And this year we got 52% state quota. So 52 cents of every earned euro goes through the hands of the state. And at the same time, wealth inequality augments. We have an influx of approximately 2 to 3 million migrants. Half of them will never work. That's the truth. So I'm not so optimistic like you, but who knows? I don't know.
Yeah, I sit from an outsider's point of view and see some of the certainly some of the things that they've done right. In Germany, listen, was never a Helmut Kohl fan, especially when it came to the. I think he was so desirous of his place in history by unifying Germany that
absolutely.
That becomes like Moby Dick with Captain Ahab. That was his white whale. And if he could get it done, he didn't care. He didn't care what the cost was, and he didn't care what the cost was going to be for the next generation, which has been great. But I think Germany has had pretty good leadership. I'm not a Merkel fan, but I think she's gotten a little bit better here because I think, she was trained. She was of course, a protege of Kohl. I actually thought Gerhard Schroeder did a good job, but I'll never understand why he called those early elections when he didn't have to in 2005, which brought Merkel, or 2004, which brought Merkel to power. And he would have just been, I think, pretty successful with the Hartz IV, which only a social democratic group could have done. And I think I think the German unions, which I have massive respect for, by the way, I know they're rough, but they had done a pretty good job, and they were visionary enough to understand that once the Berlin Wall came down and Eastern Europe opened up, the jobs were going to migrate to Eastern Europe, because you want to talk about a qualified workforce, hungry and well-trained and low wages. That was Eastern Europe. So Hartz IV to me was made perfect sense with perfect policy at the time, because German unions were agreed to freeze their wages, and they're always aggressive. As long as I've been trading currencies a long time, 6% was always on the table of Metal-Gesellschaft. Let's keep going. So they were always at, and then they said, no, they were smart enough and had enough vision to say, okay, just don't move the jobs, and we'll be much more flexible in the negotiations, which they were, which put Germany in a dynamically powerful position, because everybody else in Europe was undergoing some inflation because of the weak euro and low interest rates to help bail out Germany. And the Germans were squeezing their wages. So it's not a mistake of what took place after 2005 and why Schroeder left, except he took such a big job at Gazprom after he laid the groundwork for Nord Stream. So Nord Stream 2. So yeah, well, we can talk about that for quite a while, but they've had pretty good leadership. So I'm a little more optimistic going forward.
Thank you, Ira.
Okay. Thank you for the question.
There's a lot there, right there. How does that? I haven't thought of the transfer union. Ira, why is the transfer union? Why is the transfer union on your mind right now?
Well, because as Michael talks about, and I'm sure Robert would agree with, that in order to get to some, once you do that pandemic bailout and your EU reform that they've agreed to, you now have basically a Euro bond, which they've not been able to do from the beginning because they did this all backwards. Because again, Cole was in such a hurry, he was willing to agree to anything. So, but he knew the politics of it, as did Mitterrand. You know, people speak on this and they have no sense of the history. Again, the French ran a referendum on the Maastricht Accord, and the referendum, I believe, passed 50.1 to 49.9. And that's with Mitterrand on the campaign, and he was a very popular politician, and it still was that close. It still was that close. So, you know, it's a very, now you have the Eurobond, which is a unified debt instrument, which that means that there's going to be money transferred. End of story. And that's what they should have done to begin with. Just like the United States, you know, everybody wants to go watch Hamilton, but understand the greatness of Hamilton, if you're a Federalist, was that great because he unified the debt and was a payoff. It was a payoff. He consolidated all the debt from the Revolutionary War. In the States, you know, everybody got a little something, and the federal government got a treasury bond. So instead of having just Massachusetts debt and Georgia debt and New York debt and New Jersey debt and Pennsylvania, you consolidated it. And it was healthy for the Union because a lot of the states who would have been way underwater because they took on so much debt to put together militias to fight the Revolutionary War, that made it easy. Europe went about it ass backwards, as far as I'm concerned, if you're trying to, but they were in a hurry. And that was because Cole was in a hurry because he knew there was a limited time. You know, not everybody was in favor of the unification of Germany. Margaret Thatcher was greatly opposed to it, by the way.
I didn't know that.
Huh?
That seems that I didn't know that, and that seems something that is something I should know, and I wasn't aware of that.
Yep. Yeah, Margaret Thatcher thought it was going to prove to be a great mistake. And she got muscled by Cole and George Bush and James Baker. And we can go on and on and on. And she had to capitulate, but she was not. There were others who were opposed to it, but she was not. She thought it was going to be a grave mistake.
What do you think that the issuance of the Eurobond, how is that going to affect the U.S. Treasury markets?
Well, if they do this right, and when I say they do this right, they're going to have to, again, do what I've thought they'd have to do all along, which was what Draghi, I'm not sure it was his plan or he just walked into it because, you know, again, I hold Mario Draghi in very low esteem. Not that matters, but that's just the way I see him. He just, you know, gripped it and ripped it. He's like a long drive contest. He can't keep the ball. He doesn't know where it's going, but he's just swinging hard. So he just built this thing up. So if they start to consolidate that balance sheet into the Euro bond, that will be the culminating step. But you could see the contentiousness that they had to deal with. You know, a 2-day meeting became a 5-day meeting, and you know you can only guess at how contentious it really was in those rooms.
Market didn't react much to that, to delay after delay after delay, as I recall.
It didn't. We really didn't see much correction, you know, which was amazing because usually when you get those, you know, market disappointments, and I think I was on with you, you know, I said, it's interesting to see where it got down to in that one, when I think the euro was down 20 ticks. I said, wow, that was a Sunday night. I said, that's hard to believe. So I knew that they were close to something and everybody felt it was anybody in the know felt it was in the bag. So yes, that's a very good point.
There's the FT had a lot of directly and indirectly in the last couple of weeks, a lot of discussion about the U.S. the buildup of dollars at the Treasury, along with the buyers of second to last resort, or the lenders to second to last resort, the big banks decrease in cash reserves. How do you see that playing on the repo market? Do you see a problem coming in liquidity like we had back in September?
It could, but I think this time really is different because your fiscal stimulus is so enormous.
Yeah.
And to me, that's why that balance sheet, I've maintained that I thought they were building that balance sheet up because they know how deficient tax receipts are going to be. And they didn't want to come into September, October, having to come to Congress, to firm it up. So they did all this cash hoarding to make sure that there's enough and avoid any type of political drama. That's the way I interpreted going back to May when I started to see the Treasury General account, how enormous it was. Could it have? It could, but the Fed has promised you that they'll make it all available anyway.
Just keep printing.
You know what? Make it available. And you know what? And the Treasury is asking for more and more and more, and which I'm looking at an article right now by a Bloomberg Opinion by Tim Dewey. I'm not sure how he pronounced it, but he's from Oregon. Actually, I like reading his stuff. But the title of the headline is "More Long Bonds from the U.S. Not a Problem for the Fed." So, they got a lot of things going here. Well, I thought before we got to yield curve control again that we would probably get negative rates.
Yes.
But I'm in a severe minority on that, and I'm a wait and see mode.
Well, we had the tips. The tips came down to -1% last week.
Yeah, I know.
But that's not getting the attention that I think that it deserves. I mean,
No, you're right. And to me, it's not the best barometer anyway, to tell you. Not to me, because I have my reasons for it, but okay. But there's a lot of things, and they're going into really uncharted territory. We're all groping in the dark here because we've never seen this before. Not to this extent.
No.
And everybody who talks about World War II and what took place, but the policy is the same, but to give you full perspective, the environment in which it was done is so vastly different that be careful, because your outcomes, I wouldn't project the similar outcomes, by the way.
In what way?
It's just different times. The whole world was destroyed. You had currency controls. You were on a partial gold standard.
Okay, yeah.
The United States had just won a war not against a virus, but against a consortium of powers to raise itself to be the key power, and the world need to be rebuilt. So yes, you endured some inflation, and there was a huge, huge, huge pool of savings because, again, people were getting paid. People worked in arms factories, the guys in the military, and there was nothing to spend their money on. So there was a huge pool of savings to help with that debt situation. This is a different situation. And yes, right now, the U.S. pool of savings is ratcheted up, as we've seen. And the Fed is very concerned about that, by the way, because that's the last thing they want is to deal with Keynes's paradox of thrift, which is they don't want to deal with it because that will undermine everything they're trying to do. So this is not the same situation. I know I read it ad nauseum. Every analyst on Wall Street, they're all pushing the same agenda and outlook. I'm just not there. Not in any way, shape, or form, by the way.
Let me ask you too. There's been I've been noticing a whole, and we've talked about a little bit, is a resurgence of talk of going back onto somewhat of a gold standard or an asset-backed standard currency. Is that just a function of the rally in the metals?
Not going to happen. I mean, you might get some action from some of the other countries, China, Russia, but as far as the United States, no, because again, I allude back to me, one of the most important things that Keynes wrote was the economic consequences of Mr. Churchill, and you would crash the global system right now. If it was, listen, that's why I'm opposed to a stronger dollar. I wrote that piece citing that discussion with using the economic consequences of Mr. Churchill, that if the dollar were to continue rallying, like when Trump called for it to rally back in May, a strong dollar is good. I said, that's an idiot. And that's when I used it, because I said, that's like Churchill. And Churchill will tell you it was the worst mistake he ever made, putting Britain back on the gold standard in 1925. But I called Trump out for that right away. I said, no, that's a ridiculous statement, because this is an issue. This is an economic issue with huge financial fragilities. You do not need a strong dollar. In fact, going back to May, a strong dollar the continued strength of the dollar would have absolutely been disastrous, especially for the emerging markets, which would have spilled over everywhere else because they've been borrowed so heavily in dollars. So I'm on a weaker dollar kick for a reason. I think it's good. It's not only is it good, it's mandatory right now to alleviate some of the still great stresses in the global financial system.
A weaker dollar has gone a long way in propping up the equity markets too, hasn't it?
There's no question. No question.
The world starved for yield. Where are people going to go?
Well, it's not only starved for yield, but they think that alleviates some of the stress on the global system. Now, the system is really now runs into the other side of the coin because of it, because the Fed policy right now, bonds would be getting hit with a weaker dollar. But it doesn't happen because, everybody in your room raise their hands if they've got enough billions to get short the debt market.
No, none of we've been talking a lot about that in the last few weeks. Nobody is, which again, isn't that indicative of a world starved for yield? So the dollar's weak. Where are you going to put? You can't put. Who's going to buy any U.S. debt? Who in their right mind is going to buy a 30-year Treasury bond yielding just over 1%, or a 10-year bond that has I don't even know what the yield on the 10-year is, 5.2% or something, or 0.5%.
Hold on. Let me call it up. We don't need to guess.
Yeah, you're right. We all have charts.
We don't need to guess. We don't. Oh, it was 0.55 this morning. It's probably now about 56.5 from the way the 10-year is acting.
So isn't that right there? Isn't that a world starved for yield, weaker dollar that helps our again, going back to the Bloomberg Commodity Index? But where else are people going to place their money?
Well, that of course, and you know what? And so, what are you saddled with? So, who's buying it is always my question. Any fund manager, portfolio manager who gets his clients who has as somebody said, it's the end of the 60-40 split, because how can you put 40% of your money in bonds? You got to be a whack, especially because they're telling you and this has been my argument for years. They're telling you they want to create inflation. Well, that's not a place for me to comfortable. I understand it. And I understand the great Rich Dennis, who I think from your neighborhood growing up,
Mhm.
had a theory called the slower fool theory, which is very important for traders. You don't really want to buy that, but you think that you're a little smarter than the next person, you offload it on them. So it's not the greater fool. His theory was the slower fool, that I'm a little quicker than Matt is, so I'll be able to get rid of this because I know he'll come and buy him.
That played out every single day in front of us on the trading floor. Now it's
Yeah,
more
well,
anonymous.
but in the big picture. So when he was,
Yes.
you know, and he wrote this piece in the 80s, I think. Yeah, I'm pretty sure.
Yeah, early 80s, I would imagine, right?
Well,
just
yeah,
talking-
towards the late 80s when he had developed a think tank. You know, he actually funded a think tank, the Roosevelt think tank, and he wrote some pieces for it. But you know what? It's always made a lot of sense to me because we're all so arrogant that we think that we're a little smarter than. There's always somebody dumber coming behind us.
We're just talking about Rich Dennis today.
One
What
of his-
happened? What happened to Rich?
He's still trading, as far as I know.
Is he?
It was funny though, because I ran into played golf up at Glencoe, the public golf course where I like to play, and the starter was Steve Sullivan. I don't know if you know Sully.
I don't know. Where was he?
He off the floor. He was great, really a great guy.
No, don't know.
Really, and a great trader. We were laughing. Last place in the world, but he said, I got to get out of the house. I need something to do, and I've always wanted to do this. So it's a way for him to in Yiddish they would call it kibbutz. He likes to stand around. He gets to see people. He talks. I don't blame him.
No, that's a great place to work. Absolutely. That's a nice course too.
Yeah, for $49 because I'm a senior, I get to play.
Senior.
Well, it's the only place I take I don't take senior discounts, but you can buy a card. So I do buy the card and that entitles me to it. But I'm not a big, because I know somebody else is paying the way for it.
Yeah, that's a good point. You can let me know if you want to play. Have you ever played Midlothian?
No, you know what? And I know who do I know? I play with somebody in Arizona, I think, who belongs there. Dominic, he belongs to Medina and Midlothian. We talked about it. Dominic, I have to think about what his last name is. Very nice guy.
It's a nice course.
Oh, I used to have a childhood friend, I think, who belonged there. Believe it or not. And then Leo Shapiro. I don't know if you know.
No, I'll look for him though.
No, I don't know if he's still there. He may have moved to Olympia Fields.
Oh yeah, that's a big club out there.
Yeah, it's big. They have a lot of courses. Great course.
There's so much. You guys, do you have any other questions? There's so much going on that I had, and it's been a couple of weeks since since being in Vail last week. There's so much going on. I don't even know where to go. Anybody have any questions? Oh, Alex has a question. Alex is from Lake Tahoe, Reno area.
Okay.
And he's a 23, 24-year-old guy.
Yeah, I didn't know. Okay, let me go. I'll go dig that out.
He's got it. He just wrote it right in front of me. He wrote, with the trillions printed and another trillion or two about to be printed, if we don't see inflation, what's stopping the government from printing more?
Hey, Alex, you're 23 years old. You're too wise to be 23. Your hair is probably gray if you're asking a question like that.
Oh, wrong, Alex. He's 38. Still young.
Okay. But okay. So there's nothing to stop them because that's been their argument. And they've argued for quite a while. Hey, there's no inflation. Let's just keep going. That's the basis of the MMT crowd, the modern monetary theory crowd. And hey, see, you're wrong. But and this is why Judy Shelton is an interesting pick at the.
Oh yeah.
Okay. And there's many things I disagree with her with, but I think that her voice is needed just to break the logjam of thinking. And the issue becomes this. There's no inflation because everybody asked in 2008, or in 2009, 2010, you know, all the Fed, all those who sucked at the tit of the Fed, you know, said, yeah, there's no inflation. Keep going, keep going, keep going. You know, you go ahead, go look at the tapes. You know, everybody who came on, oh, there's no. That was because of the interest on excess reserves, which they knew, because interest on excess reserve only became part of the Fed toolkit when it was approved by Congress in like 2007 or 2008. So they knew that they had it, or maybe a little bit later. So they knew they had to have it. So the Fed was paying. So in a zero interest rate environment, if the Fed was paying 25 basis points, all the banks, they weren't lending out the money. They were just parking the money at the Fed and taking whatever they could. So there was no, as the monetarists in the world were pointing out, there was no velocity to the money, which is why you didn't get the inflation. Okay, this argument is an academic argument, and I'm not going to get into the weeds of it and sound, you know, this is an academic argument. This time, and don't forget, coupled with that, you didn't get the fiscal stimulus because you had the rise of the Tea Party in 2010, and you had the great budget debates that in which Obama did not prevail on. So you had the fiscal, basically conservatives stonewalling the Obama plan. So there was really no fiscal stimulus that went with the monetary stimulus. Now you have massive amounts of fiscal stimulus coupled with monetary stimulus. And this money is beginning to circulate. And the interest on excess reserve has been lowered to 10 basis points. So it's actually a little bit lower than the Federal Reserve rate. This is what has people a little bit nervous at this point in time. So yes, according to what the Fed tells us and the Bureau of Labor Statistics, there's very little inflation. There are many good analysts who think that there's way too much debt existing in the system. And so people aren't spending money because they know they're going to have to pay back this debt, and that's corporations as well as households. So that's slowing everything down, and you're not going to get the inflation. I'm not in that camp. I'm not in that camp yet, because I think what the Fed and the Treasury are doing are going to become dynamic in nature, and you are going to get some robustness into the inflation, which is why the only equities I've been buying are based on that view. So I've been buying high quality mining companies and grain companies, and a few others where if I think that they're going to be successful in creating inflation, that's where the greatest potential for me. Yeah, I'm not talking about the FANGs, I'm talking about very staid and quiet investing. So I try to buy companies with low debt, decent dividends, and are so unloved by the market, so unloved. So that's where I've been looking, because I'm thinking the Fed's going to be successful this time around. So I hope I answered Alex's question. If not, I'm here, so let's delve deeper.
Somebody just asked a question. If you would care to comment on Benjamin Netanyahu and Israel and world events. I'm not exactly sure what direction.
I will preface it by my innate standing is I'm very pro-Israel, but I'm not uncritical of Israel. So but I have pretty deep knowledge, historical knowledge is the way I've read it. So I will entertain a question. If I think it's a little off base, I won't, but I'm certainly, I keep abreast of the politics, and I'm not blind to failings on all sides. So yeah, I'll entertain a question.
All right, can you bring it? I don't know who wrote it or whose question it is, but can you zero in a little bit or be a little bit more specific? Care to comment on Benjamin Netanyahu and Israel and world events? But that's pretty broad.
Tell me what you're talking about.
I think he's typing. Oh, while we wait for who to get a little bit more specific with this question, one thing we talked a long time ago, or we've talked a bunch of times about the need for a cut in payroll tax. That was Trump had accomplished that in his executive order this week, along with the student loan relief and other stuff that will be politically well received. Is that do you know if that's something that they're going to continue to that Congress is going to? I haven't read the bill that the Democrats had passed, and I don't know what the Republicans are pressing for. Do you think that that's going to be something that's going to become a little bit more of a lasting effect? I'm not saying it the right way, but I think you know what I mean. Are they going to?
It's it's a tax cut for the middle class working man, as I see it, or woman. Sorry. A little more careful with my language, but that's the way I see it. They've been pushing for this for a long time, and my sense is that as others, excuse me 1 second. Yep. Oh, again, can you give me about 15 minutes, please? Okay. All right. Everybody's going to try. That's what politics does. When you get, as Rahm Emanuel said, you never let a crisis go I'm going to paraphrase, but you never let a good crisis go to waste. So everybody's going to try to grab at one of their favorite policies there. So will this one have sustenance? I don't know. And what is he willing to negotiate a way to get it? So this is an interesting one. I actually, for some reason, had Mnuchin. I watched Mnuchin on with Kramer this morning. So they kind of danced with this one. So I found it interesting. So my long short, I don't know. I don't know, but I know that this is, Trump has thrown this around for quite a while, and he really sees it as a boon. So, because that puts immediate money into people who are working, but others say, well, if you're not working, it's not going to have any impact for you. But he's been on this one. So I would say that this one's not going to go away too quickly, and we'll see The Apprentice at work, right?
That's a good. That was pretty good. I didn't expect it. I didn't expect that you would say that. That was funny.
Yeah.
Bloomberg just has a headline out that Saudi Aramco is going to cut capex for 2021.
I don't get really. First of all, I can't even believe they went public. Now they're going to sustain that dividend. I would never have bought it. I thought it was, I had my own feelings about it. Whatever. Okay, they're going to cut capex. Okay, you know what? It's still not. But capex, more importantly, and they know this full well. Capex in the Permian and in the Pennsylvania area, where all the major fracking is going on up in the Dakotas. All that capex is being destroyed anyway, because nobody's going to lend money to these guys. They've lost a fortune, even with oil prices back at $40. The interesting thing is what's going to happen with natural gas here, which has been on a nice move. So we'll see. All right, I'll take the Netanyahu question, then I'm going to be done.
He where did it go? He just asked to please feel free to comment where you on Israel and Benjamin Netanyahu, where you feel appropriate.
Okay, well, I don't know where you want to go. If you're talking about The settlement issue, I really, that is a difficult issue. It's been a difficult issue because it's as much a military issue for Israel as it is anything else. You know, it's, you know, there were American generals who talked about the craziness, the way that land was divided, and that Israel would never be able to defend it because it was 9 miles across at certain parts. You know, and I would say to people when I would discuss it with them, I said, do you understand that we're basically talking about from the CME to Bridgeport? And people don't know, you know, it's a very tough thing. So those became really, when they were initially put together by the way, a labor government. It had nothing to do with Netanyahu. It was, you know, you go back all the way to the 70s, not right after the 67 war, that it was meant to be tripwires, no different than 25,000 troops on the border of North Korea. What are those troops there for? They're a tripwire in case the North were ever going to muster their forces and attack the South. That the U.S. troops were there as a tripwire, to slow them down, to gather intelligence. You know, that's what they're there for. They've grown so big organically that they now are just part of the negotiating process. Where the negotiating process goes, I have no idea. I can tell you on different aspects of what I read, but I'll you know what? It's nothing in the Mideast is ever easy to understand. But if you're really interested in taking a look at it, because I just reread them for the third time, Foreign Affairs magazine ran 2 articles, one by Martin Indyk and one by Michael Doran, D-O-R-A-N, on the Palestinian-Israeli situation. Now, these are 2 people, 2 analysts, 2 proponents. Martin Indyk was an ambassador, who've been very involved in the process for 30 years. And their viewpoints are so drastically different that you wonder if they were in the same rooms negotiating, because they were both involved in policy. They're both still involved in policy. And the fact that how differently they see it, I always use that as my jump off point going, well, wow. So it's never as easy. And that's why I read copious amounts, not just because I'm Jewish. I find it fascinating on so many different aspects. And what I pay attention to and learn from it, but I do read everything, and I read most of the people who I disagree with. And one of my favorites to read was Orianna Falachi, who is deceased, but she was a European journalist, Italian journalist, because she at one time was very pro-Palestinian. And then she shifted, and she was very, her writings, I thought, were very honest in her shift. And I had read her when she was very pro-Palestinian, and after her shift, there were others. Joan Peter, you know, I like to read, just like when it comes to reading economic and stuff. I read people who I know I'm going to disagree with. Hopefully, I'm going to learn something as to why they think that way, and it will open my mind up a little bit more. It's the same way I approach this. So I read copious amounts. Netanyahu has political problems because the left in Israel, you know, they're almost like the left in Germany. They're trying to find their way back because they've been relegated to the political hinterlands, and so they're trying, but they haven't had great success. And Netanyahu, to me, is really a pragmatist. He's a political animal. He knows how to work all sides of the fence, but he knows he lives in a very dangerous neighborhood. And you have to be careful as to how much you're willing to give, that it doesn't threaten your security. You know, but it amazes me that people who've been wrong in their analysis for 50 years still get front and center stage. And they've been wrong. A lot of people have just been dead wrong. You know, it's like when Trump moved the embassy to Jerusalem. Oh, you know, you were going to ignite. You ignited nothing. You ignited 2 days of television. where you got some demonstrations, but they were wrong as to its outcome. And there's a lot of that on both sides. You know, there's a lot of disruption now going on in Jordan. I don't know. You see, but you don't get that enough. And Syria has been, listen, it's a dangerous, dangerous neighborhood, let alone what happened in Beirut last week. You know, will we ever find out what really happened? Probably, because they don't want international investigators there. So again, a regional world. But I think, you know, I've always believed that if everybody would step back and let them really negotiate with themselves, you'd actually get something done. The fact that everybody shows up to put their nose in there, I think has prevented real political political and diplomatic outcomes. I do. I think
That's interesting. I never thought of it that way.
if everybody would take their, you know, the Russians won because the Russians were totally removed. You know, that was to me Obama's great mistake, is he let the Russians back in Syria, and then we saw what happened. But the Russians were totally, you know, out of the game and looking to get back in. Now you have the Chinese looking, you know, and now the Chinese are making deals with the Iranians, which I personally find very interesting, because the rest of the world is worried about the Uyghurs, and the Iranians, who are the great protectors of all things Islamic, are making massive deals with the Chinese. Well, if the Chinese are truly doing to the Uyghurs, then why aren't we holding Iran responsible for that? So, I mean, things, you know, again, what's my tagline for Notes from Underground? 2 + 2 = 5. You want to see where 2 + 2 = 5 every day of the week? Watch the Mideast. So, I mean, that's my my overall take. I didn't have a specific question on Netanyahu. So, I mean, if you wanted to, I would certainly, I'm not afraid to have that discussion. But, you know, listen, I thought that the Israelis, and I took a lot of heat from friends back in 2000, that the Israelis should have absolutely acknowledged Hamas as the leader out of Gaza. But my view would have been more acerbic, because if you're the leader, now you're no longer a freedom, anti-colonial freedom fighter, or whatever you want to call it. But now I'm going to hold you responsible as I would any nation state. And if you're going to send missiles, I'm going to crush it, because every nation is allowed to defend itself. The fact that they didn't acknowledge them as a political entity, I think, was a huge mistake, and I thought so in real time. So they've been left in abeyance without any real answer.
Boy, that's real interesting.
Oh, I took a beating from, what are you, nuts? I go, yeah, you don't see the world the way I do. You know, I've again read copious amounts, and that, you know, pro and con, because I want to know everything.
Never thought of it that way.
Hey, you can't what nation would allow that? Hell, the United States
you're right.
The United States lost the Twin Towers and a few other buildings and planes, and look at the statement that they made. They went and crushed everything in its path.
My God, that's just incredibly interesting. I never thought of that. If they would have, now you've got, now you don't have a terrorist organization, you know, in quote, terrorist organization to go after. You've got
you have a sitting government.
Yes.
Well put, Matt. That's exactly right. Because a terrorist group is an amorphous group that's very hard to hit like that.
Exactly.
If I say, okay, you're the government. You want an election, you say, okay, you're the government. here's what we're going to hold you to. All the standards of any other government. And if you send missiles, well, then it's an act of war and we're going to go to war.
A lot of we live in that it's not a Chinese blessing. It was a Chinese curse, right?
Right.
You live in
Interesting times. And they're, you know what? And they're speeding up in their interest. And so
yes, they are. Yes, they are. Have you heard anything, Ira, on a separate note, and real quick? Have you heard anything about Soldier Field and Midway Airport being quietly shopped by the city and by the Park District, Chicago Park District, technically?
Oh, to raise money?
Yeah.
No, I haven't heard that, but you know what? Well, let's see. Tell me about the parking meters again.
Yeah, right.
I'm sorry. You know, I've lived here
and
so
Skyway.
long. Huh?
And the Skyway.
And the Sky. Oh God, I just was on the Skyway going to New York and coming back from New York. Oh my God, it's $16.
Oh, just probably out of spite. I'd sit in traffic on the Ryan to avoid having to pay some private company $16 to drive on that corrupting stretch of road.
I might be wrong exactly, but it's close.
Oh, it is. I think it's $8 through each toll.
Yeah, something like that. I mean, preposterous.
Oh my gosh.
Well, listen, it's the same with the parking meters. Because who are they really screwing? And I'm a city guy. You know, I grew up in a city. I still drive around looking for a spot for free. It's my nature.
I do too.
And I know where they all are, so if I can get there. But who are they really screwing? All they do is raise them. All they do is screw the middle class people. Well,
taxpayers.
They're parking their cars in garages anyway. And so the people who are really availing themselves of it, where the middle class people are coming downtown, going around, you know what? And you're killed the businesses anyway. For what? And then my question always is, who writes those tickets? Is that the city of Chicago? I know they get the revenue because when I've gotten tickets, that's who you make it out to. Well, what's the deal there? And if that's the case, the city could queer this deal at any time, because if they said we're not writing tickets until you cut the prices, but who knows what that contract looks like?
Oh my gosh. Yeah, who's got their hands in that?
But if it's the city writing the tickets, it's really easy to squeeze them, because how can a private agency be empowered to write tickets?
You can't. You're not. And that's I think that's the argument for those red lights, right? Aren't those red light cameras owned by private companies?
Well, that was another scam. I thought they took them all out. They put them back in. I got a couple of those tickets, by the way.
Yeah, I do too. I paid some of them, and then after a while, I stopped paying them. I had a conversation last week with a guy. We've got some, as any Irish family does, on the south side of Chicago, got some connections with some alder people, alder creatures, or alder assholes, and apparently there are rumors going around City Hall that and at the upper echelons of the Chicago Police Department that the city is very quietly letting it be known that that Soldier Field and Midway Airport might be for sale. They're just fielding offers. Bonds are junk. Where are they going? What else are they going to do with it?
Right.
Businesses are leaving in droves. People are leaving in droves. As we started to talk about as we were coming in, and then you've got New York that's starting to revert back into what it looked like in the 70s and 80s, God forbid.
I was just there. You can't believe how dirty it is. Honestly. And my wife went nuts because we had to take my daughter. Well, one of the things we wanted to do is we took her to the doctor, and then we were able to wheel the baby around on the Upper West Side, and we're driving back to Queens at 74th and Amsterdam. No, it was probably farther about. It was probably around 74th because we were cutting over to go to the park. So probably about 74th and Lexington. There's a guy who's basically showering on the street, pulling his pants down, cleaning himself. My wife going, "What the hell is that?" I said, "You have lived here for 2 years? Yeah. She says, no, I've never seen it like this. I mean, please. And it is, and you know, listen, I know a lot of people who love New York the way it was in the 70s and early 80s more than they do now. So they're kind of celebrating. All right, I'm going to have to take this. I will.
All right.
Okay.
Ira, thank you, Ira. Thanks
Okay.
again.
Yep.
Well, guys, I'll tell you, you know, as
Yes,
ever,
Stephen.
whenever we have a chance to talk with Ira, it's always informative, and there's always, I took 3 pages worth of notes. So I've got a lot of homework. I've got a lot of looking up to do. I've got a lot of things that I want to look up and to follow through that will help me. I always feel like I didn't get to some of the things I wanted to get into, and Ira started to talk about some actionable trades with the metals and with the bonds and the currencies, and I wanted to kind of get into, you know, some more discussion on you know, the 30,000 foot view, so to speak, and bring it back down to earth and bring it back into some more actionable trades, and we'll get there. You know, we anytime that any of you guys have a question on any global macro level, let me know and shoot it to me, because Ira will come in here 2 or 3 times a week. It's this a great resource there isn't a better resource in my mind as far as a global macro, from a global, not just a global macro perspective, but my mentor in a global macro trading environment is and has always been Ira Harris.